This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back to the Research Talks podcast here from Stockbox with, of course, Alan Green and Dan Flynn. So how have the weeks been? How's your week been, first of all, Alan?
Thanks, Mark. It's been a quiet one for me.
Okay.
Just really waiting for stuff to happen. But yeah, as I think we're all aware, obviously, the UK PLC is becoming more and more tarnished as each day goes by. And of course, the big hope is that perhaps Stan will pull something out of the bag with Donald Trump. But that's really hard to judge at this moment. But disturbing news, of course, that major companies continue to flee the UK to seek a more attractive domicile of jurisdiction, if you like. But it's leading to an uncertain outlook, and despite the fact we've got strong commodity prices, obviously gold is still powering away, and we have our bet on gentlemen, as we know, on the price there.
We do.
Yeah,
it has pulled back a little bit this week, but I suppose that's healthy.
Yeah.
Oh, correction's good. Yeah, it's just gathering steam for the next assault on was it 2,995? I think was my prediction. But yes, how's your week been, Dan?
Yeah, it's all been good, and like you're saying, it's interesting to see that being a listed company in the UK seems to be coming onto question for a lot of firms out there. And the latest one was Glencore, which said it's reviewing whether or not to ditch its UK listing in favour of New York. New York's not typically a centre for miners. London's typically held that role historically, and it follows BHP and Rio Tinto doing similar things in recent years where they don't feel like they're valued highly enough. And it makes you wonder if it's an investor appetite issue with obviously Trump being quite pro-resources, or whether there's more the UK government can do to make listing here more attractive. There's not just in the resource space, but there's a lot of PLCs leaving, and maybe Starmer and Reeves need to make it easier to be listed or incentivize people to actually put money in the market. I know raising capital gains tax in the recent budget was hardly going to get people rushing out to put more of their hard-earned cash into stocks, was it?
No, absolutely. I think I absolutely despair. I think we're seeing from so many quarters, former bastions of the stock market and well-respected commentators and former ministers urging the government to do something to rejuvenate the stock market. And it is difficult globally. That's not to say other countries aren't experiencing similar problems. The German markets aren't doing particularly well. Canada, but of course the US is really a proxy for Trump. The Trump manifesto, and seems to be the most attractive place to be at the moment. But as we've seen, with Ukraine, Trump seems to be able to. He's bringing his business acumen into the political world, and it seems to be paying dividends at the moment.
Yeah, I think he. Well, I listened to a BBC radio sort of podcast just this morning, actually, about the trip for Kia made to the United States there, and the chat was, Trump, has to make that sort of big the statement, if you like, or demand, but really he's quite shrewd. He does actually know what he's doing. I think he might come across sort of buffoonery, but he actually has a very good knack of actually sort of reading people, and what works with him is mutual respect, I think. And look what we've seen when he's sort of threatened tariffs, and immediately heads of state have gone to visit him, and they've had a chat, and they've worked it out. So it's just, I think it's perhaps a negotiating tactic. It's the shock headline or whatever, but really, it comes down to.
Yeah, he wrong-foots the
Yeah.
he wrong foots his, well, not opponent, but his opposite number, and gets them up, heading off down a particular path, and then gradually they'll come back to the negotiation. But it's a good tactic, and it works in business, and he's making it work politically as well. So actually, he's getting stuff done.
He's getting stuff done. Which is good. Which is good. Okay, good. So we're going to cover today Great Southern Copper as our main piece. I was hoping to talk to the CEO Sam Garrett, but unfortunately he's been pretty busy this week. We've not been able to actually get a time in. But effectively, they announced, I think they actually said, exceptional assay results from their first drill hole in that phase 1 drilling at the Mostaza mine, part of their Cerro Negro project there in Chile. With the results coming back pretty significant, 20 meters at 3.31% copper, 270 grams per ton silver, a deeper, richer section at 5.72 copper and nearly 500 grams per ton silver there, and peaking out at 6.62% copper, 562 grams per ton. And he's saying that these grades are 600% higher than those reported in the nearby historic drill hole from the 1980s. So, I mean, to say exceptional in an RNS, you've always got to be quite careful, haven't you, how you word these RNSs. Lawyers, nomads are going to be looking at them. Obviously, that's got passed, you would hope, and the CEO's feeling pretty good about that. But Dan, I know you've been doing some research. So, what do you make of it?
Yeah, like you say, exceptional is a big word to use, isn't it? And following that, I've sort of taken a step back and looked at the company and what it's been doing for the last 6 months or so. And if I just go back to the start of January, so Great Southern's been drilling its Cerro Negro project, which is in northern Chile. Its objective overall has been to learn more about the potential of the Mostaza mine, which historically produced a considerable amount of copper and silver as well as gold. I think the gold is less of the focus. And as you kind of alluded to there, Mark, I'd say it's been pretty successful. So drilling's complete. And over the last couple of weeks, Great Southern's announced it's intersected visible copper mineralization in all 9 of its holes. It's confirmed historically reported grades and widths beneath the historical open pit mine at Mostaza, and the extension of known copper mineralization at depth and up to 270 meters along trend to the south. And the mineralization appears to be increasing with depth. So like you say, Great Southern put the cherry on the cake with the release of the first assays this week. And these were specifically for hole CNG25DD001. And they were really impressive. Exceptional, you might say. They would certainly say. You can see the highlights in the RNS, but the most notable was the 20 meters at 3.31% copper and nearly 270 grams per ton silver from a depth of just 27 meters. I think these are notable for several reasons. First, the grades. As you pointed out, they're more than 600% higher than the historical grades reported in the 1980s. So whether or not they've hit on a higher grade part of the deposit or they were being underreported, I think still remains in question. The second is the depth. The mineralization, at just 27 meters is shallow, and that means a lower cost of mining as compared to deeper deposits. I think the other good thing is the indication of upside. So the mineralization in the hole is open at depth and in all directions. So that points to much greater potential. The question now, of course, is whether Mostaza is a blockbuster high-grade copper-silver deposit. That's what Great Southern wants. That's what existing investors want, and it's what the market wants to know. And I think really definitively confirming this economic potential at Mostaza is what will get Great Southern properly moving up over the coming weeks and months. So the response to this first physical demonstration of the area's high grades and scale has been great. Great Southern is up by more than a third this week. Its share price is close to 2.5p and its market cap is 12.8 million. And it seems like further similar developments from Mostaza seem likely to extend this run further, particularly with copper prices rallying since the beginning of the year, and with the project being neighbored by massive companies like Antofagasta, who will be watching the progress intently. Encouragingly, Great Southern has a pretty clear pathway for delivery. Assays for the remaining 8 holes it's drilled are on the way, and the company is already planning and permitting for its next stage of drilling. It feels like the market is finally starting to respond to what Great Southern's doing. So if it can continue to deliver, maybe we'll see it start to travel back towards its IPO price of around 5p.
Well, it would be nice, wouldn't it? I mean, one of the things I'd like to sort of know really is why the 600% increase. What is that sort of attributed to? I mean, is it better assay techniques, or was the historical data just not reliable, or did it not just hit the the spot that they've hit now? That would be a good question, and can indeed that be replicated effectively, or the trend will indeed hold across the other 8 holes that they're drilling right now. I don't know much about the timeline for drilling. I don't know if you know, Dan, how that sort of where we are in that process yet.
Well, they've drilled, so they're just they've got they do these assays in batches. So I expect they've got the first hole and they've reported that. So I expect the others will be coming in
So
over
it's
the
all
coming
done.
months.
Okay.
Yeah.
So it's just coming through. Yeah. Okay.
I think it's also important to remember with Great Southern, it also has the Viuda prospect, like Cerro Negro. This is part of the wider Especularia project. Sorry if I've pronounced that incorrectly. So in January, Great Southern reported that RC Drilling had identified porphyry type alteration at 7 holes at Viuda, and the company's been awaiting assay results there as well ever since. I think if these can confirm this porphyry system is like A, there, and B, economic, it'll be another string to the company's bow. The company's languished a bit since it's listed. I think it's symptomatic of the weak market and the early stage of its process. We can't really do anything about market conditions, can we? But with the company now starting to throw out some physical evidence of its project's economic potential, I think it's worth looking out for as a re-rate opportunity.
Yeah,
yeah, Alan, you agree, do you?
Yeah, well, of course, I interviewed Sam Garrett for Stockbox last year and have been following the project. But to answer, well, to try to answer Dan's comment about what's driving the share price, why has it risen? Obviously, the assay results are great, but I think also when you get a mining company that has a series of assets in some of the world, and perhaps the assets aren't particularly well known, and it then manages to acquire an asset that is known, i.e. has some history. And of course, Mostasa was previously owned and mined by Antofagasta, and that's significant. And I think the fact that the company have gone back to an existing asset, reminded, applied modern mining techniques, examined the asset and the data room as well, that's really probably the driver behind this. But as you say, Dan, you've got all the other assets owned by the company too. So it's a very exciting time. And I think anyone that managed to get in, 1.3p during February has done very well. But actually, there's so much more to come from here.
Yeah, definitely. I think as a slight caveat, it's probably worth keeping one eye on financing. The company raised 800k in November to support exploration. That's not going to last forever. A lot of drilling's taken place since, but on the one hand, that's life in the exploration game. It's very much to be expected at this stage. It's not like the company's generating revenue, but also in the funding announcement, the company did say the funds would cover its drilling exploration for 6 to 12 months, which suggests there's still a decent runway from here, right?
Well, yeah, and that's another important point, isn't it? You said that, that 780, I think it was, so nearly 800,000 that they raised. Yeah, how much of that is indeed left, and will they look to spend more of it going into the ground, or will they look to get these assays out? Maybe the share price starts to move up quite nicely. Maybe they look to to take advantage of that and get some more money in the bank. Because I mean, it's not, as you say, it's not just the news that we've heard today on the on this project, on this assay. They've got all the other areas as well, haven't they? And I mean, there's multiple different styles of deposits there, possible porphyry systems as well, and so I mean, they've got a huge area there to to go at, really, or indeed, if they wave a flag and someone else comes in and says, "Oh, actually, do you know what? We might take this off you." I don't know. They might divest a little bit. I'm not sure, but they've got a huge area to go at. And it's quite a good jurisdiction to operate in, isn't it? As I understand, certainly for copper as well. Chile's quite well known for its copper mining.
Yeah, it's I think it's a well-established jurisdiction for that, and I think the fact that Sam Garrett was involved with the discovery of Javier on at Greatland Gold affords the company a bit of
course,
goodwill in the market as well.
Yeah, it does. Yeah.
Yeah. I think if conditions were better, the company would already be trading at a higher valuation. Maybe
well, I see people saying it's going to be the next Sol Gold, but I mean that's actually one thing I was going to ask Sam was, what do you think is driving the valuation, and how do you manage, expectations that people think might get to Sol Gold? And as you mentioned, we're going to talk about GDP in a moment, but that obviously is a great story, and Sam's obviously got the history there with Greatland. So we hopefully get that interview sorted with Sam in the next week or so we can catch up on that, because it'd be nice to hear from the man himself what he's thinking. I know they're working on Met studies as well, I think, aren't they? To sort of see, and that's good. It would be good to get a sense of what the metallurgy is like. But I mean, go on.
Oh no, I was just going to say, I think really, it'd be great if you could speak to Sam, and I think it's also worth keeping an eye just out for assays. Those are due from both Mostaza and Viuda now. If they keep showing physical evidence of economic potential at both deposits, or both prospects, I should say, then I mean the market can only sit on it for so long, can't it? Bad conditions aside.
Yeah. Sorry. Just to say that the money that was raised last November, of course, was raised from two retail investors and existing majority shareholders. So if in regard to funding going forward, I wouldn't imagine it'd be too difficult, given the progress they've already made, for them to go back to those guys and say, "Hey, we need some more funding for the next stage. Can you provide us again?" So, and that won't be too dilutive either. It'll probably be done at the market rate. So that's good.
Yeah, 100%.
Excellent. Well, since you mentioned Greatland Gold, Alan, that's what you're covering today.
Greatland
and again,
Gold.
we've been trying to get an interview with Sean. These down under CEOs are hard to track down, hard to pin down. But anyway, you can give us. And apparently, Greatland Gold is a pretty trending topic these days. If you Google gold, or gold, the trends when it's sort of gold is Greatland Gold. Actually, that comes back, or gold stocks, and why not? Considering the gold price, I mean, it makes perfect sense that would be trending.
But I think it represents for many investors over the past few years the peak of achievement for investing into gold or gold retail stocks. Greatland, rocketed, had a market cap of I think it was $1.5 billion at one stage, and of course this was all based on the Javier and discovery. Sam Garrett obviously we'll doff our cap in his direction, but obviously you make a discovery like that, then you've got to manage the process and develop it and fund it, and it's a huge job. And I think the involvement of the other players like Newmont was crucial at the time. But then, of course, as the mine was developed, as the resource was developed and established, the opportunity was then passed back to Greatland last year to acquire the stake from Newmont, and of course, in return for this, Newmont agreed to receive Greatland Gold shares as consideration for the acquisition. But it came as a far more comprehensive package, and it's been transformational for the company. It's really marked its evolution from explorer into producer, because of course it's the package that was agreed was the acquisition of the Javier and gold and copper project and the Telfer gold and copper mine, and also other interests in the Patterson area. I'm not going to look at those today because those are I think incidental to the to the main operation. But obviously there's blue sky potential with those assets if they find something. So Javieran's sited. It's in Western Australia, approximately 45 kilometres to the east of the Telfer mine. But of course, Telfer has the existing infrastructure, has the processing plant. So knitting the two together makes absolute sense from a logistical standpoint and also from a cash standpoint. To put this together, a considerable amount of money was needed. The 155 million Australian dollars was raised in cash, 52 million raised in a joint venture loan repayment, and also money was raised. 100 million was raised from a group of banks, ANZ, HSBC, and ING, raised 100 million, and the gold price was secured against that loan through the purchase of 100,000 ounces of put options against future Telfer gold production, with a weighted average price of 3,887 per ounce. That's Australian dollars per ounce, through to December 25. So there's a backstop there in place. So what the team have done, they have established the Telfer stockpiles at the mine. Those stockpiles will generate free cash flow to support the development of Javieran. There's estimated to be some 11.5 million tonnes of run-of-mine stockpiles. That's the quality stockpile, and also a further 20 million tonnes of low-grade stockpiles. And this is estimated to generate production of something like 426 kilo ounces of gold equivalent over 15 months. And Greatland are also working to complete an updated JORC mineral resource estimate for Telfer by the end of the first quarter. So we should hear news on that in the next few weeks. So the company announced at the end of January that the production started. Of course, the deal was completed at the end of last year. Production started in December, and from December 4th to December 31st, something like 29,800 ounces of gold were produced, along with just over 1.189 tons of copper. A total of 639 kilotons of ore were mined from the West Dome open pit, and of course the main dome and the West Dome are the key production area for ore at Telfer, and there's also an underground mine being developed by Greatland at Telfer alongside this. So the closing stockpiles at the end of December were 10.8 million tonnes run of mine, equating to 247 kilo ounces of gold and 7.6 kilotons of copper, and a further 24.5 million tonnes of low-grade stockpiles. So the Telfer extension is now underway, and the extension plan, of course, includes the development of the underground mine at Telfer, and also with the money that's been raised, the feasibility study is underway at Javieran to develop the asset. If you look back at the news flow from Javieran over the past year, you will see that the strike areas there have been seen to extend and are still open to east and west. So there's plenty more potential for growth from the existing asset at Javieran, and of course at the new Telfer underground mine too. Then this week we had an update from Sean and the team at Greatland. Exceptional drilling results were noted at West Dome. The maiden underground program there drilled a total of 19 holes. 16 of those holes intercepted 50 or around 50 grams per ton of gold, averaging an average there of 23.2 meters at 2.95 grams per ton. Sorry, I've misread my writing there. 23.2 meters at 2.95 grams per ton, and just over 1% copper. Some exceptional numbers there also included 14 meters at 9 grams per ton gold and 8.5% copper, and then a further 59 meters at 2.82 grams per ton and 0.71% of copper. The main dome project itself has produced more than 3 million ounces since it came into production in 2006, and the team noted that the key geological features that underpinned the main dome and the ore assets in the ground there are also present in the West Dome underground mine. And mineralization is noted to be open along strike and also down dip too. So that's really a very significant discovery for Greatland, and of course it means that Telfer, which is now 100% in their ownership, has the potential to continue to produce going forward. Either way, I think that some of that success has been reflected in the share price. So the valuation is now just back over $1 billion. We're trading at 8p at the moment, just off the year highs of 9.7p. Of course, at the year lows, there are 4.9p. But this is now a gold producing company. They're going to be producing from Telfer for the rest of the year, developing Havieron, and of course developing the West Dome underground mine at the Telfer asset. So a very exciting few months in prospect. As I say, the next milestone is going to be we're going to be getting those numbers back before the end of the month. That's the updated Telfer JORC estimate.
Good.
So we often see a delay between rising gold prices and the valuations of gold companies themselves, particularly for juniors. Alan, given Greatland's much further along actually producing this project so large, do you think we might see some valuation lift soon on the basis of gold strength alone, rather than anything perhaps operationally that Greatland's doing?
Yeah, I think it is operational. I mean, we saw a lift during December, and then of course the share price fell back in the run up to Christmas. But again, for the chartists amongst us, really since November, since the acquisition of Havieron was completed and Telfer was completed, we've seen several higher lows, notably on the 20th of December, where we saw 5.7p, and then just over 6p on 21st of Jan, and that's significant. That's a floor under the share price. But where we are now, the company is now evolved into a producer. So that ore will be going to market, or the gold will be going to market. Also worth noting that the agreement for to transfer the lease to Greatland Gold at Port Hedland was completed as well as part of the transaction. So there's a direct route to market. They've just simply taken over the lease from Newmont, and that's also hugely significant too. So I think gold's going to market. The company's generating cash from those sales, and of course that cash is going back into fast tracking the development of Havieron, the feasibility study there, and then also, of course, the development of the West Dome underground mine at Telfer. So there are multiple inflection or potential value inflection points coming up, but also, of course, I mentioned at the start that you've got the blue sky potential from the Patterson assets, the Chile prospect. Of course, it was drilled last November. Came in with some great numbers too, gold and copper numbers. The Bootstrap prospect, and several others that are part of this package. So there's plenty of blue sky potential, I think, coming up in certainly by the summer.
Great,
Excellent.
Good stuff. Thank you, Alan. So Dan, you want to talk to us about Cykel AI, a bit of a different story, but I know they've been having a bit of traction recently.
Yeah, absolutely. Jumping from gold
Gold
over
to
to
yeah.
technology, but yeah, I've covered Cykel AI, which is its ticker CYK, before, but I just wanted to quickly go over it again in the face of its latest news. So to briefly recap, Cycle are applying AI in the workplace. Its workflow platform automates tasks and processes to cut costs and time while increasing productivity and growth. And recently, the company launched a suite of tools focused specifically on the recruitment sector. So it offers a range of digital workers with human avatars that automate tasks so humans can focus on more important stuff. And last month, the company announced the integration of DeepSeek's AI into its platform, cutting costs by up to 96%. DeepSeek being the Chinese AI program that caused a bit of a stir last month. So the news generated a lot of discussion, and Cycle's volume spiked at the time, but the stock's valuation itself hasn't really moved too much since. I personally think there's a compelling investment case for Cycle that doesn't appear to currently be hitting the market at large. First, rather than just positioning itself as an AI company generally, it is positioning itself as a first mover in the market for AI in the workplace specifically. So there's that focus. Second, that first mover position could be hugely valuable. McKinsey estimates that AI will add $4.4 trillion in productivity growth over the coming years. Third, Cycle's more open than some other AI companies with how it actually plans to monetize its AI offering. This isn't a vague idea in the proof of concept stage like we see with some companies. It's actually rolling out an increasingly sophisticated platform to a growing number of clients, and it's cutting costs to make it more profitable. So I will say it's not all of this isn't to say Cycle will definitely be a success. You'd need a crystal ball to make that sort of prediction in a nascent and rapidly evolving sector like AI. But I do think the company offers a compelling narrative, and I expect that's why this week Cycle was able to announce an oversubscribed £800,000 placing at a premium to market value. Unfortunately, it still hasn't moved the needle for the company valuation rise. But I think the fact a party or parties with significant financial firepower believe in the company enough to buy into its vision at a price above market rate at this early stage is certainly worth noting. With Cycle now having some capital behind it to continue improving and scaling up its offering, it'll be interesting to see how its financials shape up in its next results. If they're impressive, they'll likely put some more meat on the bones for would-be investors who are currently sitting in the wings, waiting for the moment to pull the trigger. And should we see that happen, we could see Cycle's valuation again move up from its share price, move up from below 4p towards the highs of above 8p, which it hit last year when the market was sort of buying anything associated with AI without prejudice. So I think the key here is to look out for the financials. I think that could be whenever they're released, it could be a good catalyst for some additional buying.
Yeah, okay, good. I mean, AI always gets better, doesn't it? Every iteration, it always seems to get a bit better, and Cycle's certainly very there right at the start of the early stage. But the share price did react very nicely to that news about that they announced the DeepSeek the other week. So I think that started to put it on the radar of some AI investors. And I think it really just comes down to, they've got to just continue really showing the business case, I guess, for how it's going to actually make some money.
Yeah. I think the problem is there's such a early with AI at the moment. It's such an early sector. I think time's going to tell which stocks are the quality ones. This is always the case with things like this, and that's why that's kind of what I'm saying with the fact that it's focused on the workplace significantly. I think that focus gives it a bit of more of a fighting chance at actually staying the course rather than just being like, we're in AI and benefiting from the general interest in the sector that comes with just having AI in your name. So I'm quite optimistic about this one.
Good. Yeah. Well, Alan, you've got a new one for us this week. One Health Group.
One Health Group, yes. Yeah. So this is, as a UK resident, you can't help but be cognizant of the waiting lists
Okay.
with the NHS. I mean, where the NHS is wait from 6 months to 2 years. But a directive was issued by the NHS and the government at the start of the year. The government's aiming to hit 18-week waiting times for various operations. But for some years, the private sector have been used to help to fill the gaps for where waiting lists have gone on for too long. And there are a number of companies operating in this area. And One Health Group, which is currently Aquis listed, but will be moving to AIM on 20th of March. This is a company operating in the sector, and it provides medical services in the form of elective surgical care, supporting the NHS. The consultants obviously work in the private sector, but also support the NHS, managing patients across a network of community clinics and independent hospitals. Now, this business was set up in 2001. And it was incorporated in 2001, and the business as it is today was established in 2004 by the current chairman, Derek Bickerstaff, and Derek is a practicing consultant surgeon. Adam Binns is the chief executive, and it was at that time largely a response to government legislation regarding the Patient Choice Initiative. One Health Group has an AQP status, that's any qualified provider status, and it provides this fast, free, high quality NHS care, but specifically for patients referred for orthopedic, spinal issues, general surgery, and also gynecology as well. The company is based in Sheffield. Last year, in its latest update, it treated nearly 14,000 patients across 35 locations across the UK, predominantly based in the north of England, and contributions came from 100 NHS surgeons and anaesthetists across that time. And that was from the period April 24 to September 24. The company has just raised 8 million. It's raised 7 million in a placing, and 500,000 in an open offer to qualifying shareholders, and a retail offer at 500,000 also. That was successfully completed at 180 pence. Shares currently trading at 190p. They've traded as high as 210 pence on the year, but very little movement in the stock. But I suspect that when this company gets to AIM, it's really going to kick off. And the proceeds from that raise are going to be used to fund their first surgical hub through to operations. So the build costs are estimated to be about 8 or 9 million, but it will be delivering some 6 to 9 million in revenue per annum. Current trading is very good. So when it issued the prospectus, an update on trading was provided. Revenue, profitability, and cash ahead of management expectations. First half revenue was up 22% to 13.3 million. Underlying EBITDA up nearly 40% to just under $1 million. And the company ended that period with cash of 4.9 million, up from 3.6 million previously. It also pays a dividend too, and that dividend is now 2.7p. The interim dividend was 2.07p, up from 2.03 pence previously. But I think this is an issue that isn't going to go away. It's going to only increase, and through having its own surgical hub, I would imagine that the plan of the company is to develop a series of other hubs throughout the country to further accelerate that. But when you consider each hub is going to be generating between £6 and £9 million a year, that's pretty impressive. So we're investing into a known problem, a problem that isn't going to go away. And I think this company looks to have created a remarkable niche in this market, and is one of the key players. Certainly, as we go forward into this the new labour-led world.
Okay, and it's moving to AIM over to AIM, you say?
Yeah, it's moving from ACCUS to AIM. That will complete on the 20th of March. So there's a general meeting being held on the 10th of March to tick all the boxes, but that will be a formality. Money's been raised as well. So, comes to AIM fully funded and ready to go.
Mm. Well, that should hopefully open up some more liquidity, shouldn't it, when it moves over?
Oh, definitely. Yeah. Well, yes. I mean, AIM's not exactly covered itself in glory, but it'll certainly be better.
But it's a little bit better, maybe.
Yeah.
Well, interesting proposition. Yeah, I mean, I haven't lived in the UK now for a little while, and I hear about the problems. So anything that can be done to help that. I mean, I saw something on the news this morning that apparently something's changed with the National Health Service, so there's no rush for 8 a.m. appointments or something like that. I'm not really sure if anyone else saw that, but I don't know what that means. I don't know. I wasn't really sure, but something was agreed. I think it was more funding. So this sort of rush for the 8 a.m. appointment. So I guess it's when people ring in the morning, is it, to get drop-ins on the day? I'm not sure.
Yeah,
it is. Yeah, that's right.
And depending on where you live, well, you either have a good surgery or a rubbish surgery. And if you try and get an appointment here, good luck. It's I think once we phoned last year, and the reception said, "Oh yes, it'll be 2 weeks before the doctor can call you back to find out what the problem is." So that gives you some idea of the scale of the issue.
Amazing. Yeah. All right. Well, thank you, gentlemen, again for your time this week.
Pleasure.
And we'll speak next week. Hopefully have an interview clip to slot in next week. But thanks for your time this week.
Thank you, Mark.
Thanks, guys. Cheers.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.